The unthinkable is happening. Luxury car brands that once defined prestige and performance are now fighting for survival. In 2025, seven iconic names face financial collapse, reshaping the automotive world forever. But what went so catastrophically wrong? Let's find out. 7. Mitsubishi. Starting our countdown at number 7, we have Mitsubishi. Now, while Mitsubishi isn't exclusively a luxury brand, it has offered premium variants in select markets. But here's the reality. They're in deep trouble. Mitsubishi has gone years without launching any significant new models, especially in Europe. Their lineup feels ancient compared to competitors who are rolling out cutting-edge EVs and hybrid technologies. And the quality issues? They're relentless. Recalls, reliability complaints, and software glitches have absolutely decimated consumer confidence. The company has been slashing costs, closing factories, and limiting product lines just to stay afloat. But it's not enough. Their reputation has crumbled, their market share has evaporated, and bankruptcy proceedings loom ominously on the horizon. 6. Genesis. At number 6, we have Genesis, Hyundai's ambitious luxury division. On paper, Genesis seemed like it had everything: favorable reviews, competitive pricing, and backing from a major automotive giant. But here's the problem. Genesis never achieved the scale or the prestige needed to compete with European luxury titans like Mercedes-Benz, BMW, or Audi. In 2025, their sales have stagnated. They've failed to create a diversified electric portfolio that can compete in the rapidly evolving luxury EV market. The brand's quiet financial struggles reveal a harsh truth. In the luxury segment, you need more than good cars. You need heritage, brand equity, and most importantly, rapid innovation. Genesis has none of these at the level required, and now they're paying the price. 5Fisker. Number 5 brings us to Fisker, once hailed as the next big thing in luxury electric vehicles. That dream died spectacularly. Fisker filed for Chapter 11 bankruptcy in late 2024. Their ambitious luxury EV crossover project collapsed under the weight of cash flow problems and endless production delays. Despite initial hype and investor enthusiasm, Fisker couldn't secure the sustained capital needed to survive in this brutally expensive technology-driven market. Here's what's fascinating. Fisker's collapse exposed just how difficult it is for new entrants to break into the luxury EV space. Established brands have decades of infrastructure, supply chain relationships, and brand loyalty. Fisker had none of that, and it showed. Investor confidence evaporated, and with it, any hope of a comeback. But here's where things get really wild. These bankruptcies aren't just isolated failures. They reveal a deeper, more terrifying crisis in the luxury automotive industry. The transition to electric vehicles is far more expensive and complex than anyone anticipated. Luxury brands that spent decades perfecting combustion engines now have to completely reinvent themselves in just a few years. Development costs for EVs are astronomical. Battery technology is still evolving. Charging infrastructure is incomplete, and consumer preferences are unpredictable. Brands that move too slowly get left behind, but brands that move too quickly, like Jaguar, destroy themselves. Add in supply chain disruptions, semiconductor shortages, and changing emissions regulations across different markets, and you have a perfect storm. Even financially healthy brands are struggling. For those already weakened, bankruptcy is inevitable. 4. Infiniti. At number 4, we have Infiniti, Nissan's luxury division that's been quietly dying for years. And in 2025, that slow death is accelerating toward bankruptcy. Get this, Infiniti's sales have been cut in half over the last decade. Dozens of dealerships have closed because demand simply isn't there. Their model range is shrinking, quality issues are rampant, and they've had multiple CEO turnovers that show leadership instability. But here's the deeper issue. Infiniti has no clear identity in the EV revolution. They're not innovating fast enough, their products aren't compelling enough, and they can't compete with European and American luxury giants who are pouring billions into electrification. Without a coherent strategy or breakthrough products, Infiniti is bleeding out financially, struggling to justify its existence in an increasingly crowded and electrified luxury market. 3. Jaguar. Coming in at number 3 is Jaguar, and their story is a masterclass in how not to pivot to electric vehicles. Jaguar made an absolutely shocking decision. They went fully electric almost overnight, discontinuing all internal combustion models abruptly. The problem? They didn't have a robust EV lineup ready to replace them. This created what industry analysts call a product vacuum. Loyal customers who loved Jaguar's powerful combustion engines suddenly had nothing to buy. The delayed arrival of new EV models, combined with persistent quality complaints and terrible resale values, has absolutely destroyed consumer confidence. Why would Jaguar, a brand with over 100 years of automotive heritage and a passionate customer base, make such a reckless strategic decision that essentially left them with no products to sell during one of the most critical transition periods in automotive history? What internal pressures or external mandates could have possibly justified abandoning their entire combustion lineup before having proven market-ready electric alternatives? Well, Jaguar was under immense pressure from parent company Tata Motors and European Union regulations demanding rapid decarbonization. They faced massive fines if they didn't meet aggressive emissions targets by 2025. So management made a calculated gamble. Go all in on EVs immediately, rebrand completely, and hope the new electric models would arrive quickly enough to fill the gap. But the gamble failed catastrophically. Development delays, supply chain issues, and battery technology challenges meant their EV lineup was months, then years behind schedule. Meanwhile, they had no products to sell. Dealerships were empty. Customers defected to competitors. And now Jaguar's caught in no man's land. Not combustion, not fully electric, and financially bleeding as a result. 2. Maserati. At number 2, we have Maserati, the once glorious Italian luxury brand that's now circling the bankruptcy drain. Maserati, under parent company Stellantis, has seen its financial health deteriorate at an alarming rate. Sales volumes are shrinking, costs are rising, and dealerships worldwide are shutting down. These dealerships were crucial for maintaining relationships with high-value luxury clients, and now they're disappearing. But the problems go deeper than numbers. Customer perception of Maserati is tanked. The brand struggles with inconsistent quality standards, gaps in product innovation, and a rushed electrification strategy that's produced no competitive EVs. Stellantis is juggling multiple legacy brands and facing factory shutdowns across its portfolio. Maserati risks being sidelined completely or divested as part of broader group restructuring. The brand that once represented Italian luxury and craftsmanship is now just another financial liability. 1. Porsche. And now the most shocking bankruptcy story of 2025, Porsche. Yes, you heard that right. Porsche, the German engineering icon, is facing potential bankruptcy. Porsche's profit didn't just decline, it crashed by nearly 99%. They even reported a €966 million operating loss, one of the worst in its history. Let that sink in. This is a brand that defined performance luxury for generations. So what went wrong? Porsche made a massive, costly pivot to electric vehicles. They poured billions into EV research and development, recalibrated their entire supply chain, and launched ambitious new electric models. But the EV launches were delayed repeatedly. Development costs exploded beyond projections, and consumer adoption of luxury EVs didn't materialize at the rates Porsche anticipated. But how could Porsche, a company that has consistently been one of the most profitable automakers per vehicle sold, with legendary financial management and a fiercely loyal customer base willing to pay premium prices, experience a catastrophic 99% profit crash so suddenly? What specific strategic miscalculations or unforeseen market forces? The answer reveals the dangerous complexity of the EV transition for luxury brands. Porsche's combustion engine vehicles, particularly the 911 and Cayenne, generated massive profit margins, sometimes exceeding 30% per vehicle. These were cash cows that funded the entire company. But when Porsche committed to electrification, everything changed. Electric vehicle development requires completely different engineering expertise, supply chains, and manufacturing processes. Porsche had to build new factories, retrain thousands of workers, and source batteries from external suppliers, eliminating their traditional vertical integration advantage. Then came the delays. The Macan EV, expected to be a massive seller, faced repeated postponements due to software issues and battery supply problems. Meanwhile, Porsche was still paying for all the development costs, factory conversions, and workforce retraining. But here's where it gets worse. Porsche's parent company, Volkswagen Group, is facing its own financial crisis. Reports suggest they're considering selling prestigious brands like Lamborghini and Ducati just to raise cash. Porsche, once the profit engine of the entire group, is now part of the problem. The brand also miscalculated consumer preferences. Many Porsche loyalists wanted to keep buying combustion engine sports cars, not electric SUVs. By rushing toward electrification without maintaining their combustion lineup, Porsche alienated core customers while failing to attract enough new EV buyers to compensate. And the result? Massive losses, restructuring efforts including significant job cuts, and the very real possibility of bankruptcy for one of the world's most iconic automotive brands. So there you have it, 7 luxury car brands facing bankruptcy in 2025. Which of these brands do you think will actually survive? Drop your thoughts in the comments below. And if you found this valuable, please hit that subscribe button, and we will keep you updated as these stories develop.